Hello, everyone. How is everyone doing? Happy Wednesday. Good morning, Sterling, who's not going to be in here. He's got a doctor's appointment, but thank you, Sterling, for putting everything in, putting in all the necessary information. We had Waller speaking, very dovish this morning, continuing his audition for the next Fed chair. Neutral rate, his neutral rate is a lot lower than the other Fed members' neutral rate. So again, pressing for rate cuts. We also have Muslim's talking now. They're saying maybe by 2020. What was Muslim just saying? I'm looking at my other monitor. I expect inflation to ebb back to 2% by second half of 2026. Have we hit 2% yet? Period. So now it's going to rise up again. And then we're going to ebb back. You've had the target. You're like 54 months above your target. It's a complete joke. Just get rid of the friggin' Fed. I don't want a politically controlled Fed. I don't want any Fed. Just get rid of it. Just get rid of the damn thing. Yeah, Google's up big, not required to sell Chrome. So Google and Apple are both up. What else? What else do we have? You guys everybody can read that. I gotta get through it. We had some earnings. We had Campbell stock this morning. Thank you for putting those in too, Sterling. Which was a beat miss, up 2.42. You had Zscaler, which was a beat. That was yesterday afternoon. I'm just getting through all this stuff. Sterling spent the time to put this in, so I want to make sure I tick off all the great things. Macy's was a beat, up big, 12.68%. Dollar Tree was also a beat, down 6.78%. What's interesting is Dollar Tree did not manage to close above the 62.5 on a daily basis. Did not manage to do it, so the probability did not shift, and now it's down after a decent earnings report. So what else do we have? I can't get through all of this, but gold keeps going. Good morning. Good morning, OD Green. Good morning, Patrick. Good morning, Tony. Good morning, John. Good morning, Rusty. Over on Rumble. And by the way, I did get your email, Rusty, and I do like Patrick Boyle's channel a lot. I have not watched that video yet. I'm a little behind on catching up on YouTube videos, but thank you for pointing that out. I will definitely watch it. And I've already been a subscriber to his channel. But again, if anybody wants to send me stuff that thinks it's important that I watch, please do. Pathtradingpartners@gmail.com is the best way to do it right now. So, did I say good morning, John? All right. So that's where we sit. Very interesting day yesterday. Actually saved by Google and Apple after the judge ruling yesterday. But let's take a look. Let's go through today. We got mortgage stuff out this morning, a little drop in mortgage rates. What else where's my red book numbers? This is where we can't function without Sterling. He's at the doctor's and we can't function without the current numbers, 6.5%. 6.5, we got Mussolini speaking now. We got the JOLTS openings and quits at 10 a.m. Eastern and factory orders. So that is still some key information, especially with it being non-farm payrolls week. Everybody's going to key off of everything related to payrolls. This afternoon we got Kashkari speaking, and that is about it. Heat map today. Google, Apple, driving it this morning. I don't know why Tesla's up, because we was probably just buy something. You see Dollar General down in conjunction with theirs. Dollar Tree down now 7%. Down 7%. Oil's dropping. It could not. I don't know if anybody saw the live stream when I was on Futures Edge yesterday afternoon, and I said I was watching for it to then hold that key support level. It did not. That's why I didn't rush in with cycles at the top, did not rush into oil, because I need to pull back and hold that level, which it did not. So, overall, I mean, the market's really being driven by comm services, Apple, and somewhat Tesla. Groups today, you see comm services. We'll just do a quick little refresh. Comm services and technology leading. Basic materials, decent, but a lot of other stuff flat to down. Fed Watch still is 91% for the rate cut in September. So fear and greed's back to neutral mode with yesterday's price action. Schiller PE 38.50. Oh, I get so funny when people saying that buy the dip, the market's cheap. Like, oh no, it's still going up though. Again, well, what do we have? We went through the earnings this morning. Thanks to Sterling putting them in. Salesforce after the close, which is the big one today. I guess C3 AI for the AI fanatics. And then tomorrow morning, there isn't much. Tomorrow afternoon, there is. Tomorrow morning, there's not much. Good afternoon from the Netherlands. Thank you for tuning in, Ron. Thank you. Good morning, Heinrich. Good morning, Anissa. Hey, Christoph. Thank you for joining. All right. So, S&P. Here, I'm going to zoom in. 62.5 level right here. We bounced. All right. First of all, we dipped slightly below into the buying pressure zone. There's actually a fair amount of put gamma down there, short from the short puts. And bouncing back strongly now and closing back above the 62.5. So it did not tip the probabilities. It really doesn't matter at this point. This is the minor one, and we already ticked off the 87.5 anyways. So I'm still watching the 62.5 for a breakdown level. If we were, which is actually today's low. 6402, 6400, and then I'm going back to that 6380 area as my targets if we were to break down. We did have, I don't know if anybody spotted this, I know Sterling did because he texted me, inverse head and shoulders yesterday afternoon on the S&P that triggered. First and second targets hit. Third target, should we continue higher this morning? There's a pretty key level at 6460, which we got to get above. But then the next target is back to 6468 area. It's an area, this is prior congestion. So that's what I'm keeping an eye on. What else am I keeping an eye on? I am keeping an eye on, let me get to the 4 hour. I'm looking at these harmonics. These harmonics, where's my low from yesterday? There it is. I can take off this other line. That's from the head and shoulders. Here's the other area I'm watching on a closing basis. We have the 62.5 from the retracement. These are the retracement ones from the high back on Thursday to the low yesterday. We are still in the potential rollover zone. We've ticked off the first and second targets on the head and shoulders. We're still in the potential rollover zone. I will keep watching for that. I'm watching for still continued upward price action potentially today, but we've got to close above 64.66 to change the probabilities. And there's major resistance. I have to stop saying actually this morning. Saying it a little too much. There is major resistance right at that final target. Just above the 62.5. So could we come up, tap there, and still close below 62.5? Yes. If we do close above the 62.5, I'll then shift back to still looking for higher price action, potentially through the week, and a little more recovery. Does that make sense? If we roll over and don't hit the final target on the head and shoulders, and we roll over, again, key closing today would be 64.2275. That would also probably take it back below the channel line, which again, we recovered yesterday back above the channel line. So also remember, closing price is the most important, especially daily closing price. That is the analysis. The NASDAQ. Here's your 62.5. Let me make this a blue one also, just to be in sync with the other one. There's the 62.5. We came down before we closed below it and tacked off that 75. Again, tacked off the 75 yesterday. Buying pressure down here we talked about. And the 50. We closed back above the 62.5, so it couldn't follow through with tipping the probabilities again. And we closed back above the neckline. Remember, this is a channeling head and shoulders. We closed back above the neckline, so we did not officially trigger the head and shoulders. We confirmed it, but did not trigger it. Still not triggered. Yesterday afternoon, hope some people spotted this. Double bottom. Double bottom. Triggered. First target hit. Looks like it's trying to plow up to the second target, 23,470 area. Final target, 23,534. Let's see how that plays out. Also with this retracement bounce from these hot, not from the all-time highs, but I'm watching these from these highs of last, hold on one second. Let me just change the color. The highs from last Thursday also. You see this resistance shelf right here, right in line with the 62.5. 23,511.75 on a closing basis today. Does that mean we're going back to all-time highs? No. It just means we could see a little more of a continued bounce still higher. Okay? We could still run into major resistance still at the shoulder. What would invalidate the double at this point? I'm using the walk-away trend line. If we get above this key trend line on a closing basis, the double, which is not confirmed, which is confirmed but not triggered, I am saying it's off the table. If the other method is if you wanted to use the retracement rules, it would be virtually in the same, it would be actually a little lower. I'm using the trend line. So that's what I'm using to invalidate this. If we come up here and don't close above the trend line and roll over and still close back below the neckline, the potential head and shoulders is in play. So before that, if we do roll over and nothing holds this morning, I'm watching 23,320. 23,315 to 23,320 for a breakdown. That's support. But if that breaks down, then I'm going with this couldn't sustain anymore. And then I'm looking back to around the major levels of 23,200. The Dow, again, remember, against the rotation zone, dipped, confirming the double on a daily basis, did not trigger it. So we have not seen these minor topping patterns trigger. We have not seen that. So that's still key for me on the Dow. A daily close below 45,489. Other than that, Dow is still holding the key breakout level and the rotation zone. Russell, dipping in the rotation zone yesterday. By the way, if the Russell does get a move on above yesterday's high, it is a percent beat by a long way off from happening. I'm still watching for moves up in the Russell, although today on the open, it's got to get above 23.55 and sustain above there. So VIX, that's why we talked about this yesterday, spiking up, no close above the 62.5. And once it started dropping with the afternoon momentum, as I said, I like to get out of, and Jim mentioned this also with his hedges yesterday, looking to get out of partials. Okay, I'm going to look to reestablish, to take stuff off into the spike, reestablish partials lower, not the full thing. You got to leave hedges on. We're only at September 3rd. From my opinion, we have to leave hedges on. By the way, I'll be looking also if we get a little more aggressive into the. We'll see how the VIX reacts before non-farm payrolls, which is on Friday. DAX breaking down, closing below the trend line, holding the candle bodies and the defining point. So that is the next key level that has to be taken out, but I'm starting to look on any DAX bounce plays. We are at cycle bottoms. We are oversold, so I'll be looking for a bounce and then a potential rollover play. Yields bounced yesterday, triggering the percent beat buy on the close. So yesterday's close, Friday's close is very, very key. All right, which is also at the major support. So I'm staying in short-term bullish mode unless we close below Friday's low. All right. Yeah, we're against the rotation zone. It's got to be managed closely, but that's what I'm looking at. 30 years bouncing off this what did it hit was the high yesterday? 5.001, and then bouncing off, but just back to key support. Yields are still, they're taking a little breather today. Everywhere. I think Japan is up, though. If you look at Japan 30-year, that's resuming its climb higher. There's Japan 30-year. I'm keeping a close eye on a bunch of these yields, including the pound, the Great Britain yields, pulling back again, but broke above major resistance. Take a little breather. France, take a little breather, but still trend is up in global yields on some very key countries. What else? Crude. Mentioned on the futures edge, I need to stay. If it broke above the 65 level, it had to stay above there, and it did not because the cycles were at the top. I'm not saying it did not because cycles were at the top, but that's why I said it had to stay above there. It did not. Okay? So, do I have a strong sell pattern yet? No, this was not a strong sell pattern. I am being very patient. Okay? This, again, was with this big price action, the targets did not work for this being a double. I'm going to look on how it bounces back. If there is a bounce back, see if it rolls over, sets up another sell pattern. Other than that, no. Right now, from a trend line perspective, I'm keeping an eye on this key trend line. Gold continues to rocket ship higher. Next harmonic still 36.36. Then I'm looking at 36.50. Then I'm looking at 37.45. Nothing's changed with the targets, although on short-term stuff, moving up stops aggressive. Silver taking a breather today. No new high, no new recent high just yet. So there is a little mini double that's now going to be off the table. Dollar index hitting key resistance, still this 98.20 and starting to pull back. Going to be watching where this pullback occurs, though. But there's no play other than support resistance in here. What else? The spiders, again, on the rally. Going to be looking at this today. We're above 642.20, which is now support. If we break that, I'm going back to around yesterday's close, 640.27. Key for me is 644.02. A close above that, and if it does rally hard, it would be to the gap fill 645.05. But the key level I'm watching today is 644.02. Going into the open, I'm paying attention to yesterday's low, 643.14. We're still slightly below that. The Qs, same thing, not from the highs, but from the highs of last Thursday. We're above this 568.77 area. For the gap fill is to 570.40 or 570.02. Key on the close is right around this just above 571. 571.08 is key on the closing basis. So this could easily fill the gap and not close above there. That's what I'm going to be watching for that close. Again, on the head and shoulders, confirmed but not triggered. All right. Bitcoin bouncing back to the key resistance level. Cycle still heading up. Not yet overbought. Still watching for rollover plays. We've not hit the first target on the double top. Broadcom, which we still have earnings tomorrow afternoon. Gap down yesterday, filled the gap. A gap up today. None of this will invalidate the double yet. If it gets above 308.48, the double is off the table. I should say the potential double's off the table. Tesla, we had a little gap up today. Again, no great setups in Tesla. There is, in the short term, this very strong, confirmed by yesterday, this strong trend line. So we'll be watching on a rollover play for that to potentially break. With that, what else do we have? That is really about it. Let's just peek in at the S&P. Oh, let's take a look at Google. Because the key gap up, trading 226.62 above the next harmonic 223. So let's see where our minor harmonics put us also. I was looking for an entry in this, but with the ruling yesterday, it blew that out of the water. And we have that strong cluster there. So if this keeps running, 233.17 is the next major harmonic area. 224, 220, upper 223s is now support based off harmonics. All right, that's where we'll leave it. That's where we'll leave it, besides peeking in at the S&P. Not much to talk about with that. Not much to talk about. Just still looking to see if we can hold. Again, going into the open, going to watch the support ledger around 64.44. And in the NASDAQ, going to be watching this key support right around 23.410 to 23.400. If that starts breaking, then I'll be patient on any longs. With that, I shall talk to everyone back tomorrow. Everyone have a wonderful, wonderful trading day. Bye for now.